Good morning, good afternoon, and good evening, depending on where you're joining us from. Welcome, and thank you for joining today's launch of our Investor Framework for Nature-Based Solution. I'm Anna Yang, the Executive Director of Sustainability Accelerator, and I will be your host and chair for today's discussion. Just a bit of housekeeping. The event today is not held under Chatham House rule, and it will be recorded. And throughout the discussion, please post any questions you have for our panelists in the Q&A box, and I will be monitoring it and try to answer some of your questions during the Q&A section. Before I go to the panel session and introduce the framework, I would also just like to say a few words on the background of the discussion today. And I'll touch on 3 points. One is the challenges and opportunity in unlocking capital to nature-based solution. Introduce the framework, and then how we see its role in a variety of initiatives. How does it fit in terms of the body of knowledge that's being generated out there? And finally, the process, the co-creation process the journey that we took to build this framework. So with that, I will ask my colleague to put up the slide. So just very quickly, Chatham House is an independent policy research think tank founded 101 years ago. And I think what is most important is that our objective is to foster mutual understanding between stakeholders through ideas, debate, and rigorous analysis. The accelerator was launched in May this year, and we have 3 objectives. And our objective is to contribute towards Chatham House second century goal. And our 3 objectives is to mainstream and accelerate sustainability solutions, is to take the long-term view and focus on intersection of finance, innovation, and sustainability. And finally, to be really experimental with innovative ways to engage, to gather, and to mobilize people. A little bit on the context of why nature-based solution and climate change. So if we start from the report that was launched by the IPCC, it demonstrates that net zero can be reached, but only with shifting how land is managed. So nature, regeneration of nature, conservation of forest and natural habitat needs to be part of the low carbon future. And obviously how much nature, how much reforestation, nature-based solution, part of it will depend on 2 issues. One is the extent to which heavy carbon emitting sectors are transitioning away from business as usual, and how quick and how ambitious they are. So, sorry, I mentioned where it is and also how fast it is. And then what you can see is like different typologies of how the interplay between mitigation actions in different sectors, but also where then negative emission technologies or carbon capture technologies need to be part of this. The second context that I would want to share is that we all just came out of COP26. And obviously, one of the key takeaways is that nature was part of the COP26 discussion. And obviously, it's part of it is featuring into investors' radar. If we think about the Paris aligned commitment or the 1.5 degree aligned commitment, one of the successes, or I wouldn't say success, but one of the step forward on the Glasgow was that we managed to keep the 1.5 degree alive. We do need more ambition, but also there was the forest deal. Obviously, what is important about this forest deal is that nature and forest is part of this negotiation, and there are, more commitments from 110 world leaders. And finally, what you can see from the graph on the right-hand side is also the increasing investor commitment to nature, whether it is funds that different big corporations announced, or different initiatives that are now bubbling up, including ours, in how to mobilize investors. But I think the key takeaway from this is actually, as investment in nature are mainstream, we need to really focus on implementation, but also integrity, right? We want to make sure that funding into nature are delivered in the best way that maximize the benefit of the social environmental benefit, and also the fairness of this transition pathway. One of the analysis that we made in as more investors moving into nature-based solution is what we want to do with this project is to address investors' confidence to transform commitment into action. Obviously, addressing climate change and reversing biodiversity loss is, there's different numbers floating around, but they're in the orders of trillions of dollars. And so we need to be able to crowd in private finance to leverage the capital to invest in this, but also more importantly, to raise the private investor, we need to be able to address the investor confidence gap. And they're in 3 levels. One is confidence in policy, confidence in market, and then also confidence in knowledge. And the framework sort of sits in between trying to address the knowledge piece, but start to unpack some of the drivers of risk and return of nature-based solution. And we will complement this piece of work with also next year with some research around the portfolio of policy that needs to be in place in terms of the policy signals that investors are looking for. So if I want to share in terms of conceptual framework, what is this? And it's a conceptual learning tool that facilitates the inclusion of nature-based solution into a comprehensive portfolio decarbonization. And it is, as I said, adding to the body of knowledge that is now being generated around nature-based solution and how to bring investors on board. And the next slide will show that this is in terms of, there are lots of initiatives out there. And what we want to use is taking from the IUCN Global Standards on Nature-Based Solutions, some of the guidelines out there, and then say within that, how can investor be involved with this? And then tease out what are the best practice in terms of performance standards, so that we can minimize the negative impact and maximize the positive outcome. And obviously, it's a transition journey for everyone. And so this, what we would want the framework is to enable that transition and enable that kind of conversation. As I said before, we are using the nature-based solution, and then just a very quick description on nature-based solutions, actions that work with and enhance nature to help address a wide range of societal and environmental challenges. What I think is important about the IUCN's framework is that it addresses the whole protect, restore, and manage. And also it brings the rural and the urban, and then also all the beyond carbon benefits. And I think this is what we want to be able to do through the framework, is to go through that journey. What I also want to say is that this framework is in terms of the caveat, it is land-based. It doesn't address the oceans yet. But what I also want to talk about is the process. So it is a co-creation process. From December 2020 to September, we gathered a series of expert land-based investors, mainstream investors, and environmental organizations to co-create this process. And throughout this, we had 52 participants from 38 organizations from different parts of the continent. It is a land-based investor. And, if we come to, we're roughly 20 billion asset under management investors who joined we're part of this process, and it kind of represents 40% of Timberland investment markets in 2017. So the next slide, then we'll talk about a little bit on the timeline. But I think what I wanted to show with this is what the message that I want to share with you is what we're bringing out there is not new in the sense, it's new in terms of how we organize the knowledge, but the knowledge is in investors who have years and decades of track record on how to do good investment in forest and in land. What we want to is to enlarge that conversation and then bring all the full spectrum of what nature-based solution can provide. What I also want to say is what the framework can provide and what it can't provide, and what is, so in the next slide, we should be able to see that. What are the main audience? So there are 2 groups of investors, the committed investors, and they're actually the ones who help shape the architecture of the framework, but also new investors, interested investors who have committed to net zero or who have committed to nature. And then that can be part of a learning tool. But we want to use this for environmental communities so that they can have conversations when they engage with investors in that process. There are strengths and limitations that we want to recognize in terms of what this framework provides. It's a conceptual learning tool that facilitates the inclusion of nature-based solution within a comprehensive portfolio decarbonization strategy. And we want to also acknowledge that the nature-based solution conversation exists within larger conversation of the role of food and land use sector in terms of the low carbon transition. And so within this project, we didn't address the role of agricultural activities because it's within beyond the scope of the project. Also, what is outside of scope is that this framework assumes investment in nature-based solution, but it does not apply to offset discussion. And the most important thing, and this is not a replacement for the diligence process, it is the learning tool. And finally, I would like to take this opportunity to thank the funders who enabled the development of this project. And with that, I want to hand over to a lineup of panelists that we have with us today. So we will have Mark Wishney, Head of Landscape Capital and Chief Sustainability Officer from BTG Pactual Timberland Investment Group, followed by Henry Boucher, Partner, Deputy Chief Investment Officer from Saracen and Partner, and then Helen Avery, Director, Nature Program, and GFI Hive from Green Finance Institute. Just also to say that Mark is part of our expert panel group who, together with a couple of individuals, helped guide us through the process. So with that, I'll hand over to Mark. Thank you, Mark.
Thanks very much, Anna, and very good to be here today. So Anna asked me to just speak a little bit about the framework itself and highlight a little bit more about how we arrived where we did. As Anna said, the focus of the discussions of the group were really, we started with a focus on within the universe of nature-based solutions. We focused on forests in particular because we had to limit the scope and because that's where the most analyses say the majority of the opportunity lies one way or another. And we had sort of in mind a challenge that we were trying to address, which is this significant increase that Anna also referenced in institutional investor interest in nature-based solutions. So we're starting to see trillions of dollars be committed to net zero. Companies that have never considered investments in forest before beginning to actively seek forest-based investments to generate returns, but primarily because of their climate benefits. And we saw a big gap in the capacity of that investor capital to effectively be deployed into these solutions. And we also feel that we see a gap between project developers or investee companies on the ground and their ability to understand and communicate their value proposition back to investors. And so we thought about a framework that might sort of allow investors to more rapidly get up the curve and be able to deploy capital effectively, and perhaps also guide companies on the ground in terms of how they might translate their value proposition into terms that institutional investors in particular might understand. So there are, of course, many other kinds of investors in the marketplace. There are many other kinds of companies and many other nature-based solutions potentially available, but that was the frame within which we were working. And Henry, would you be able to share the web site with the framework? So what we arrived at was what we think of as a three-stage or a three-tier sort of approach to guiding, and this is really here from sort of the institutional investor perspective, guiding an investor into the world of nature-based solutions. Because I think for many of us who are actively involved in these conversations with these institutions, often investors are starting from a place where they're not even quite sure what a nature-based solution is, and it seems like an entirely new kind of asset class and an entirely new approach that they need to take to understanding how to engage. And so what we thought we worked through was a three-stage or a three-tier framework where we said, well, first, there is a level of analysis that any investor needs to conduct on any investment, which is in a sense somewhat universal and is what most institutions should be very comfortable doing, evaluating issues around market risks and jurisdictional risks and counterparty risks, et cetera. All of the sort of the fundamental diligence and evaluation that we go into assessing an opportunity. We then thought, and maybe if you would expand out the three, Henry, thanks. We then thought that if we're focusing on forest-based, nature-based solutions, there is an existing and well-established institutional investment sector in forests. It is a small sector relative to others. Perhaps numbers vary, but maybe $200 billion of institutional capital invested in private investment in forests today. Maybe 10 trillion in real estate. So it's relatively small compared to other sectors. But there are a number of investors that are familiar with the industry. There are tools available to understand how forests grow, how forest markets develop. And so there are a number of tools which have been developed and sort of analytical approaches that have been developed for traditional commercial forest investments. And so we thought that there's a lot that we can build from there, and that we can take advantage of that knowledge, and in particular thinking about issues around the fundamentals of the forest industry, the sector, the asset class, how it behaves, how it functions within a landscape. What are some of the biological and physical risk factors that apply to forests that we've already learned a lot about through sort of conventional commercial investment, but that also apply to nature-based solutions, so that we're not starting from scratch there. And then the final stage, the third stage of the framework of the analysis, we thought is trying to layer in then what are some of the considerations that are actually more specific to a nature-based approach, and we structure those around ESG, environmental, social, and governance concerns or considerations. And we thought about, as investors are entering the space, the motivation is often primarily on climate, but investors are increasingly demanding, and we think appropriately so, that they not simply be generating dollars and carbon molecule benefits, but that these investments also, in order to be true nature-based solutions, also be addressing biodiversity and social considerations. And although there has been a significant focus, I think, in this space on ways to monetize these other values, to monetize environmental services like water or biodiversity, we think those are important and should continue. We think that investors can actually begin to reflect these values in their analysis, not necessarily on the cash flow or the revenue generating side, but on the risk side. That is, that as we're thinking through how should investors be incorporating biodiversity and social considerations into their investment analyses, this is really in part a risk mitigation measure, that projects or opportunities that do not adequately address biodiversity, water, and environmental and social considerations actually have a different risk profile. And so this is, we think, an appropriate way to begin to incorporate some of these considerations into investment decision making, even when there's not a monetary value, not a quantified financial value that we can assign to them. And so the thinking here, again, these three stages are linked. There are different ways that they could be organized, but trying to organize sort of the key considerations around what any investor should feel comfortable doing around what those investors that are already comfortable with forests should be sort of comfortable understanding and drawing on some of those tools and analyses. And then finally articulating how these considerations around environmental, social, and governance issues actually can begin to appear in this investment analysis, even where we don't have sort of full quantification and monetization of those values. So let me pause there. I'm probably over the time allotted, but we, this I would just end by saying that this is a work in progress, and we think an iterative we hope to be a living document that will continue to improve and develop over time.
Thank you, Mark. I'll hand over to Henry. Thank you, Henry. Over to you.
Well, thank you, Anna. I'm delighted to be here. I thought that as a public markets institutional investor, it would be helpful to describe some of the background as to why I see this framework as so important. I mean, you've mentioned obviously a caveat. The framework's been designed for individual projects at this stage with a sort of private finance sort of view, not public markets. But I think it has real scope to scale up over time. But I think you all are very aware that there are many challenges in integrating nature into the financial system overall and putting a cost onto uncosted negative externalities. And the first of those really is a lack of awareness. I think few people in the private sector investment world have much knowledge of how nature is damaged in the process of generating their investment returns. And that really stems, I think, from their view of the world through the financial accounts. Accounts are really a downstream record of financial outcomes. They don't record any of the upstream activities or sort of product afterlife impacts on nature. And nearly all businesses are planned on those financial accounts. The directors are remunerated on them. And above all, investment analysis is based on them. So if nature-based solutions are to go mainstream, we have to incorporate into account some really hard measurements of the sustainable adverse impacts caused in generating profits. So I think for many big institutional investors, effectively land is lost in the system. It's not tangible to them. It's somewhere hidden in the depths of a lot of the investments they're making. The good news is that the need to integrate aspects of natural capital is being recognized in some of the regulations that are coming through. So we have the European Union SFDR, the Sustainable Financial Disclosure Regulations, which came into place in March this year, but will gradually start to crank up requirements to report. So all institutional investors in Europe and then subsequently in the UK will need to report their adverse impacts over time. And then there's also a green taxonomy to define what is a sustainable investment, and in particular, to think about the significant harms. There's a sort of concept there called do no significant harm, in particular to a lot of natural capital. So from the end of next year, we're going to begin to see mandatory adverse impact reporting, and I think therefore increasing recognition of natural capital deficits. And at the same time as these sort of risk awareness is increasing, so too are some of the opportunities, because in the public sector, governments are beginning to redirect public funds and provide incentives to landowners to encourage them to provide public benefits, whether these are carbon credits or other forms of payment for ecosystem services. They are basically offering a potentially new financial income stream, and that is attracting the attention, as Mark was saying, of quite a lot of institutional investors. And big companies are also changing their behavior. In a sense, they're trying to buy some moral justification, if you like, in some cases, for the harms that they cause. And they're doing that by creating sort of offsetting benefits to nature elsewhere. And so they're getting more involved in land ownership and afforestation and even rewilding in some cases. I would add also that in this whole process, there's a growing clamor from many retail investors, the underlying customers of a lot of big institutions, to create a sort of positive impact as well as making money. This is still very ill-defined. Tree planting has become sort of very popular, but effectively what it's doing is it's bringing in a sort of greater relevance to a sort of moral judgment as well as a financial judgment in investment. So I think what this is doing is it's creating a sort of blurring of investment objectives, and indeed the prospect of the harvest from any piece of land is now potentially going to be shared. So effectively, the financial capital is going to be making some concession to natural capital. And ultimately, that's where this framework fits in. What the framework does is it provides a tool, a template, if you like, for sharing the yield. So the yield off the investment is effectively shared between financial capital and natural capital. And the framework allows us effectively to consider that, particularly, as I say, given the lack of knowledge where a lot of people are coming from. This is a sort of, indeed, an accelerator. It's a way of getting people straight to the heart of the matter and to think about some of the issues. Now, there are, I think, one or two limitations to the framework. So the nature-based section at the moment asks for lists of monetized quantitative and non-monetized but quantitative factors. And that quant data is at the moment very scarce and hard to estimate. But I think given particularly the regulatory drive I was describing, that's going to get easier over time. So the important thing at this early stage is not so much to sort of actually have that quant data, it's to recognize in your modeling that effectively there is a framework in which you can understand those factors. Now, if I'm going to be very optimistic, I'd sort of point you to some of the changes in the price of natural capital recently. Look at the price of carbon credits in Europe this year. It's effectively tripled. I mean, that's giving cryptocurrencies quite a run for their money. So if we can begin to sort of create better frameworks, begin to sort of monetize nature effectively, I think that we can begin to overcome some of the sort of lack of quant issues really quite rapidly. If I was going to have expressed perhaps one downside or one fear, it would perhaps be a skepticism. It's that because we have a vacuum of data at the moment, it will, I'm afraid, get filled to some extent with greenwashing on nature, just to some extent as it has been on carbon so far. And I think that's a sort of slightly unfortunate sort of part of the sustainability transition. But I think when the data does eventually arrive, it will be overcome. But I think we'll have to look out for that. And perhaps, we have to hope that this framework doesn't get abused by those who are trying to gain unnecessary credit. So I should probably wrap there and just say, I think 2022 is going to be a real year in which nature gains a lot more focus. And the next steps, as I see it, for this framework will be to increasingly link to a lot of the other initiatives out there that I've described, like the SFDR and the taxonomy. As people get more interested in those, I think they're also going to be quite interested in this framework.
Thank you, Henry. Before I hand over to Helen, also just to the participants, don't forget to post your questions in the Q&A so that we can then have open plenary discussion. So Helen, over to you.
Thanks, Anna. Yeah, delighted to be here. So thanks for having me. And firstly, congratulations on the framework. I think it's incredibly helpful and really fills a gap at the moment. And I appreciate it also provides this journey, so it doesn't rule out investors, which I think is really crucial. You don't want to alienate investors. We're trying to build confidence, so I really appreciate that. So Anna asked me to sort of share what we're seeing at the Institute in terms of how to develop investor confidence and private investment in NBS and nature restoration more broadly. I think to some extent, it's just to keep highlighting what the finance gap is and how much do we need to invest. That sort of drives engagement, gets people hot under the collar and puts a fire underneath them, I suppose. And we understand this need to put money into our forests and also stop putting money into deforestation, but less so over the other areas of nature-based solutions, nature restoration. So, for example, I know Vivid Economics had a great report that highlighted that huge global finance gap for NBS. In the UK, we commissioned environmental economics consultancy firm FTech to look at the UK's financing gap, and it's between 44 and 97 billion pounds over the next decade to reach key nature goals. So we know that it's a massive gap, and I think we need to keep putting that story out there to sort of encourage the finance sector to step up and understand there's an opportunity for investment here. We also know that there are really small amounts of funding going in or private funding going into nature at the moment, although there is kind of a lack of transparency around those figures, and I think it would be helpful for us to sort of shed a bit more of a light on that, and even just qualify what is a nature positive investment. To Henry's point about greenwashing, we don't really quite get our hands around it, which is why I think your framework is really helpful at sort of framing that up to, like, what does it look like? What does best practice and look like? I'm just thinking that at CPIC, the Coalition for Private Investment in Conservation, their latest report estimated something like I think it was $1.3 billion of investment in 2020 in private investment in what they call conservation, which is just peanuts compared to what we need. So I think framing that story again and again of, look, we really need the money to flow in helps. And then to drive that private investment and build that confidence, I couldn't agree more with you, Anna. It's knowledge sharing. We also think it's pipeline development. So, I think tools like frameworks like your own that provide guidance, as you mentioned, the IUCN's MBS global standards, sharing of really in-depth case studies, or just sharing knowledge through any medium, to be honest, I think is really helpful. And we lack a sort of collective place for that, but I think we can all go to. It's one of the reasons we set up GFI Hive, as you know. In addition to that sort of knowledge sharing to develop investment appetite, make it easier for them to come to the table, we really think it's about building pipeline. And in particular, that requires sort of identifying the barriers to that pipeline and then unpicking them together in a cross-sector collaboration. Because we know that for investors to come to the table, we need to show there are revenue streams developed from MBS that can make for attractive investments. And there are some very real and in the weeds, local, regional, national barriers to some of those right now, to some of those environmental markets being created, particularly about carbon credits, for example. In the UK, we have woodland and peatland carbon credit code, and a soil carbon code is under development. But without that soil carbon code, it's very hard to invest in regenerative agriculture because that revenue stream isn't there. And there are policy and regulatory barriers that are preventing the water sector from investing in green infrastructure, for example. So it's about identifying those barriers and then collectively governments, private sector, finance sector, NGOs coming up with solutions. And then just finally, I'd say often the quickest way to uncover those barriers is to test things out. So I'm really for testing the art of the possible, capturing those learnings, and you need that sort of capacity and technical assistance funding to keep coming through when it comes to MBS. Just thinking about the EIB's Natural Capital Finance Facility and the UK's Natural Environment Investment Readiness Fund, that have just been really helpful. They may not end up with investable projects, but we know quicker what does work, what doesn't work. We've tested out what the barriers are. So more of that, I think, that we need. And rethinking the role of concessionary capital as well, being a bit smarter about how we use public sector and philanthropic capital. Instead of just sort of straight grants and donations, can it provide price floors for carbon, for example, if it's peatland carbon, just thinking about the UK? How does it crowd in private sector more? And I always think about the Agri3 fund from Rabobank when I think about how development finance can actually crowd in private capital. So I hope that sort of gives you a bit of a flavour, but I'm totally with you. It's knowledge sharing, and it's also sort of breaking down these barriers, and then there's a role for concessionary and catalytic capital.
Thank you, Helen. So now we have about 20 minutes for Q&A. So there was one here, I'll just post it to everyone. Like, would be interesting to hear from the panel, how does the framework relate to the role that policy can play to unlock capital for nature-based solutions? Who would like to take that one?
I think that just two thoughts there. I think that the framework, by trying to identify sort of some of the key considerations and questions for investors to answer, hopefully helps to articulate what some of the barriers and challenges are, which are the questions that are hardest to answer, and where would policy be beneficial. Henry talked about some of the difficulty in quantifying some of these values, and Anna, you talked about investor confidence. So there are a variety of places where public policy can play a role. Everything from what we often think of in the land sector of sort of policy around clarifying land tenure and resolving land ownership issues, which facilitates then more private sector activity, to also, I think, areas that are not always the focus of discussions of forests and lands that are focused on the markets for products that are going to come from these investments. In our discussion of the framework, we didn't address carbon offsets directly. We think that obviously their carbon benefits are increasingly reflected in markets through carbon offsets and may begin to be reflected in corporate carbon accounting under the Greenhouse Gas Protocol. But for the most part, investors in these projects need to generate revenue from other sources. The global carbon markets are still very small. So we're thinking of projects that deliver carbon benefits, but also generate other products. So when we're thinking about where policy can be helpful from an investor perspective, policies that help support growth and demand for products from nature-based solutions, whether that's timber or resins or fruits or other biomaterials, and that also provide safeguards and sort of guideposts around ensuring the sustainability of the production of those products, I think potentially very powerful tools for growing investment in nature-based solutions and growing with the outcomes that we want to see on landscapes.
Thank you, Mark. Henry or Helen? Yeah, Henry.
Can I just pick up on one point Mark made, which I thought was absolutely crucial, which is this idea of certainty, I think, from policymakers. This is about providing incentives. And if you look at sort of previous sort of eras where, for instance, the incentives provided on solar panels by some countries were sort of withdrawn at sort of very short notice, that's the sort of policy area we want to avoid here. So I think we need policy with certainty. I think the other issue really is around helping people define, the different types of behavior, different types of things that are good and bad. And I talked about the European Union green taxonomy, which defines what they describe as sustainable activities, and starting with climate change mitigation and adaptation. But I think as well as defining the good, in the case of land use, they should also be defining the bad. And therefore there is a plan afoot to develop a brown taxonomy as well. And I think, those sorts of sort of wings of certainty would be very helpful from policymakers as people come into this space, and they need to try and understand what's good and what's not, because that will really help in the future.
Thank you. Helen, did you want to come in on this? There are other...
No, I think that was really well covered. I appreciate hearing that. Thanks.
All right. There are two questions. One is from Steve Ree. If you're the Steve Ree, I think you are. Hi. But so Steve has three questions. One is, what is the expected return on investment? The second is, what is the expected tenor? And then the third is, what is the minimum ticket size? Then there's another question also is, how to ensure that capital flows to nature-based solution in new markets other than the established forest market? Two really big questions. Who wants to?
Sorry, Anna, could you repeat the first one again? I'm afraid
the first one is, what is the expected return on investment? What is the expected tenure? And what is the minimum ticket size? And the other one is, how to ensure that capital flows to nature-based solution, new market other than established forest market. I can also take the Steve question, but I want to also first give the opportunity for the panelists to come in.
Shall I kick off with what's the expected return?
Please.
I think sadly very low, and this is a real challenge. I mean, obviously today we have yields on all assets around the world at very low levels, and sort of farmland isn't unique in having this very low yield. And therefore, if you have this concept of sharing that yield, in other words, the return you can earn off the land with nature-based solutions, so you're potentially going to have a lower crop yield in order to make way for nature, then you're going to have an even lower yield. And that's why the role of incentives is so important here. We have to somehow create almost an extra revenue stream. One of the reasons that a lot of big institutions don't go to land investment very much today is that they find it uncertain and relatively sort of low return environment. So I think we do need to boost the expected return. Really good question. In terms of the tenure and the time scale, that goes back to the certainty point. I think that we need to in effect, somehow create some better instruments or structures that give people a little bit more idea of the sort of duration of their investment. And indeed, with land, again, liquidity is a really big issue for some investors. And that, again, comes back to minimum ticket size. So maybe we need to be inventing, different ways of holding land rather than it being sort of pooled typically in private hands. And often those private hands are motivated by things like tax incentives, such as, inheritance tax benefits and those kinds of things. So maybe a rethink of a number of the sort of background issues that have driven those investment factors is overdue. So I thought that was a really good question.
Mark, did you want to come in on that as well, or?
Sure. Yeah. I think. The first answer is, of course, on Steve's questions. Return ticket size and tenor it depends, right? It varies an awful lot on all kinds of things and where you are and what the investment is. To Henry's point, though, I think that there are some general trends or factors that I think we can expect to see. One is, as Henry's alluding to, if we're trying to optimize an investment not just for a commercial return in production of traditional products, and we're trying to generate a carbon benefit which is not monetized or not reflected in the market, then we should expect a lower return. I think that trend is generally true. I think there's a second trend, which is that I referenced the greenhouse gas protocol, which is the sort of accounting system for corporate disclosures of carbon emissions, and in some sense is the starting point for figuring out whether or not a corporation needs to buy offsets. Right, you figure out first what your emissions are and what you can avoid, what you can reduce, and whatever you can't address otherwise you offset. For financial investors, all these $60 trillion of net zero asset manager and asset owner initiative commitments, investors are looking at portfolios where they're trying to get to net zero over some time frame. And I think that if corporate accounting better accounts for nature-based solutions and the climate benefits of nature-based solutions, then investors may begin to price higher investments that generate negative carbon emissions, that allow them to get to net zero by balancing out positive emissions elsewhere in their portfolio. That would tend to increase the value or the price of these investments, and would likely overall decrease their return, because you're paying more for something that's generating the same amount of cash, but you're paying for it because it's providing other benefits in your portfolio. So that would have a sort of also in total increased value but reduced return. The third thing that I would say, the third sort of trend there, is that I think that in all the discussions of nature-based solutions, it's really, I think, important that we also be talking about the bioeconomy. That is, if we're going to rapidly increase investments in nature and try and support those with things other than just carbon finance, then we need to have, again, markets that are demanding products from sustainably managed landscapes. So growing the bioeconomy, looking for opportunities to substitute biomaterials for non-renewable materials, can decarbonize other hard to abate sectors like the construction sector, for example, and also support financial returns for investors that are seeking to invest in nature-based solutions. So I think the end result is going to be a product of those three sort of macro trends. In terms of ticket size, these tend to be large investments. I would say it depends, again, of course, and as Henry said, we may need to find new ways to enable investment into landscapes for smaller ticket sizes, but these tend to be large, complicated investments, and ticket sizes tend to be large. So for smaller project developers, it can be difficult to access finance because they're sort of not big enough to be able to, get the attention of investors. And tenor is, of course, going to vary also, but I would say that nature-based solutions in general are supported or better facilitated when investors can invest for longer periods of time.
Thank you. There was one here about track record in terms of many of the innovation, sustainable forestry or nature-based solution activity take time to develop track record. And so the question actually is a framework, but also here, I'd like to hear from you, which is like, how can the framework reflect a sector that's very fluid? Before I actually hand over that to Mark, Henry, or Helen, that's one of the challenges that we have been struggling is there has been quite a lot of activity, happening in the space and a lot of innovation happening, notwithstanding the whole project development and the pipeline. And we do think of it as a living document, a living architecture. So this is why there is like a conceptual scaffolding that you can hang stuff around afterwards to complement with more details. And that actually does me also trying to answer Will's point about where we have provided some detail within the current website, the current framework, but we want to keep on adding so that it is a living document. As more knowledge is being generated out there, how do we connect to other body of knowledge that's out there? So it's not a standalone that lives in vacuum, but it's something that enables people to as they go into the nature-based solution investment journey. But I also want to sort of hear from Helen, Mark, and Henry in terms of the pipeline and an innovation aspect of how do we capture all of that moving part. Helen, do you want to go first?
Sure. I know obviously Mark and Henry are much more familiar with the framework, having played a role in it than I am. I just wanted to sort of echo that. I think it's the beginning of a journey. I mean, it's so nascent investing in MBS. I mean, we've talked about it for a long time, but I think now there's this impetus behind it. So being able to sort of be fluid with that, I think is really important. And I'll sort of leave to Mark and Henry to talk about how the framework impacts the pipeline, because I say they'll know better. There was just a couple of things I wanted to come back on. That last question was Mark's point about the bioeconomy. I do think that the role of the task force on nature-related financial disclosures, the TNFD, is going to be a boost for that supply chain investment. We're going to see more investment in ag tech and sort of a clean economy and things like that, as companies sort of realize that they've got to start looking at their dependencies and impacts and the changing through their supply chain. So I think that's coming, and it's going to help move things a little bit faster. We've got till end of 2023 till that framework's out. So I just wanted to put that point in the mix, because it often sort of gets forgotten that we've also got this sort of push coming this way. But yeah, I'll leave it for Mark and Henry to talk about the framework and pipeline.
Well, I mean, the question about the timeline for sort of these solutions to develop. So there is a sense. I mean, that is true. In that these are natural systems and that we're talking about, and they in many cases take a long time to develop. It can take a long time for solutions to be implemented or realized across landscapes. But it's also true that I don't see us as starting zero. There are a lot of have been developed. There's a lot that we know about how to manage landscapes for a variety of outcomes. And it is, I think the solutions lie both, it's a combination of innovation and new approaches, new technological solutions, new approaches to land management, and taking what we already know and assembling what we know in new ways to deliver a different set of outcomes. So there are a lot of tools that have been developed to define, identify, monitor what sustainable forest management is, what it looks like. We know an awful lot about managing forests to generate different kinds of values, how to plant trees or restore ecosystems. The challenge is, I think, in combining what we know in ways that are scalable and investable and deliver these outcomes. But we're not necessarily starting with an empty toolbox. We need to add more tools, but we have a lot of tools in there. We just need to use them in maybe some novel ways.
Yeah.
Can I just add one thing, which I think is a really strange sort of point, which depends which end of the spectrum you're coming from. So I think there was a study that came out a couple of years ago that looked at the difference between restoring land to wild forest and plantations. And I think the carbon captured by the wild forest was something like 40 times greater than the plantation. And therefore, if your motivation is to continue to effectively farm a piece of land and get two yields off it, one which is a crop and one which is some kind of nature-based solution, then you're probably going to end up with a whole range of different sort of factors to consider than if you're going for the full carbon offset version, where your entire yield is provided by the the carbon offset. And I think that's just one of the sort of complicated factors that we have to think about when we talk about this overall heading of nature-based solutions. They are very, very different things, and it depends really what they're trying to achieve. And that will vary, even across relatively small differences in geography. So it is a very complex area, and this is what Patha Dasgupta was discussing in his wonderful long report. I'm afraid there's no sort of single simple definition that we can get to, which allows us to sort of really create a sort of metric and say, right, okay, you've got a single market for this nature stuff. It's going to vary everywhere, and the complexities of policy and all the other things are enormous.
Could I just make one following comment there, just to come in on what Henry just contributed. I agree, and I think I guess one, just an observation that 40-to-1 ratio that Henry referenced, that of course can also be flipped. So to Henry's point, it really matters where you are. This becomes all very site specific. That's part of what the framework tries to address, to sort of guide investors into how to think about what many of these site specific considerations actually are. But to just emphasize another point that Henry made, I think it was clear, it seemed clear to me through the process that there is not a single solution. The answer is not tree planting, it's not forest protection, it's not regenerative agriculture. It is all of those, and not just all of those in different places, but it really often all of those in combination. That really what we're talking about is in many cases sort of approaches that integrate multiple solutions in a single landscape in order to achieve commercial outcomes and carbon outcomes and biodiversity outcomes. So really, there's this is a bit of a hackneyed phrase, but there's absolutely not a one-size-fits-all approach here.
One last question. This one was specifically, it moved around. Sorry. Where was the question that was specifically to Henry? How far away are we from institutional investors being comfortable and able to invest in nature positive securities? And why are we so far away?
I think the question was answering itself in a sense. We're on the way. And I think that is partly, all sorts of issues we've talked about so far. So I think, the regulation's moving in the right direction. The policy framework is beginning to move in the right direction. But it's this awareness and lack of understanding. I think, the education process that you referred to right back at the beginning is really so important, because people need to really get a handle on, the uncosted negative externalities, the harm that's being caused in the way that a whole range of economic activities take place. And a lot of them are harming nature in many ways, but, we have all of the planetary boundaries to worry about. And so I think I'd be a bit more optimistic on time frame. I think people will be really beginning to embrace this through 2022 and 23, because they will want to be not just greenwashing, but genuinely expressing a view that they realize this is unsustainable, and they want to be sustainable. They're going to have to change the way that financial capital is allocated. It's going to have to recognize that financial capital rests on social capital, natural capital, human capital. These factors are as important, and it's really complex stuff. But everyone will be effectively now moving into that new discussion. And I come back to why this framework is so important, because it really does help people rationalize the complexity and bring in traditional risk factors in layer one, and the ESG factors as well. And that's the big debate that's happening everywhere. And so I'm optimistic within a couple of years, we're going to begin to see quite serious amounts of capital flowing. It may not come from obvious sources. I think the retail market is the one that's really pushing the conscience side of things. And in a funny sort of way, the institutional market is rather stuck with its sort of, I must hide behind my fiduciary duty. The only thing I can do is maximize the financial return on capital. But the other factors, the other capitals are now becoming, absolutely front of the agenda.
Thank you, Henry. That's a really good way for us to sort of end this. But Mark and Helen, I would like to invite you maybe just to share some of your final thoughts and insights before I close this webinar.
Sure. I just wanted to sort of agree with Henry there. I think we've reached this point now where institutional investments start to play in. And on the retail side, we're seeing a lot of retail bonds actually with good returns. And I've seen more than 10% returns on things like continuous cover forestry as well, that's attracting institutional investment. So there are returns out there, and I think continuous cover forestry doesn't get talked about enough, actually. Just throw that in at the end. But definitely, I mean, even if you just think about the Natural Capital Investment Alliance, it's got 12 members now, committed to 10 billion by 2022. 10 billion, yes, drop in the ocean for what we need, but wow, when you think of where we've come from in just 2 years around this, I'm with Henry. I think I am actually optimistic, especially with that TNFD sort of pushing everyone along as well. So it may take, it might not be everyone in the next 2 years, but I think we're really sort of creating some momentum now.
Thanks, Helen. Mark?
Yeah, well, I agree with Helen and Henry. I think they articulated that very well. I mean, I think I guess from where I sit professionally in the timberland investment space, what I see the greatest challenge in our sector is actually to respond to the demand now, and we have some work to do, I think, to be able to do that. But that's at least in the near term or midterm, that's a very high quality problem to have. So I think that there's some momentum. There are commitments that are actually starting to get to a scale that's commensurate with the challenge, and so that's very encouraging.
Thank you. And so just a very quick sort of in terms of the direction of travel by the framework. I mean, like I said before, the framework is a bit of a scaffolding in terms of how we organize the ideas. And there are 3 ways that we think more things need to be done. One is, Henry alluded, and also Mark talked about it, it's like, how do we aggregate, right? I mean, how do we make sure that individual grants, individual investments get sort of aggregated, and then you can then mobilize a larger amount of funding. There's a second one, which is like, how do we connect this to the impact investment frameworks? Like, how to report positive impact, and then what are the key metrics and criteria that really matter, that also deliver the beyond financial return and beyond the financial value. And then the third one is really to add more detail, more layers in terms of unpack the discussion on scope, unpack the discussion on like, what does it mean? What are the best practices out there, so that it becomes like this a resource that investors can use. So those are the 3 directions of travel that we can see. And this is a call to action to all of you to sort of join us in this. And I think the final thing that I want to do is to thank everyone. I mean, to thank the speakers for joining us today, but also to thank the expert panel members, the organizations that agreed to join the road test, and also all the participants who joined the multiple workshop and helped shape this framework. There's more work, but just really thank you for all the time that you have dedicated, and hopefully we can also mobilize your time and your intellectual creativity to make it, more robust and something that is even more useful. And finally, I want to thank Suzanne and Henry from my team who pushed through this, and especially Henry, to make sure that this, this project is alive and kicking and delivering everything on time. And with that, thank you very much for joining us this afternoon. Good evening, good afternoon, and good morning, depending on where you're joining us. And thank you so much.